Lesson 2B, Crypto Mindset versus Stock Mindset. Fundamental differences. One big fundamental difference between cryptocurrency and the stock market is that tokens are not shares of a company. The tokens you are buying are actually rewards from their native blockchain. Like we mentioned before in Unit 1 in the mining lesson, we talked about how miners are securing the network by putting up their resources in order to mine new blocks. So in a proof of work consensus protocol, miners are using their electricity and their computing power to mine blocks and secure the network. And in a proof of stake consensus protocol, miners are putting up their actual tokens and staking their tokens in order to mine new blocks and secure the network. So since miners are using their resources to secure the network for everyone, miners are rewarded for their work, and successful miners are the first to hold brand new tokens. This is a different concept from buying a share of stock in the stock market. When you buy a stock, you are literally buying a piece of that company. So you're buying a percentage of that company when you purchase a stock. Generally, as the company profits or loses, your stock shares will increase or decrease in value. Again, this is a fundamental difference between cryptocurrency and stocks. In general, the success of the token is correlated to the success of the project, but the success of the project is not correlated to the success of the token price. So what does this mean? Let's take another look at stocks. When you buy a stock or a share of a company, you're buying future profit or loss. So as the company makes money, you are essentially making money. It's built in to the price because you are owning that company. Well, owning cryptocurrency is a little bit different because the success of the project is not correlated to the success of the token price. And what does this mean? Sometimes you have different token minting schedules and tokens being used for different things. In blockchain projects, the token can be utilized for different things. It doesn't just track future value and future profit. The token could be used for, let's say, governance, or it could be burned as certain amount of transactions are fulfilled, or more tokens could be minted as a certain amount of transactions are filled. So the token price really doesn't have anything to do with the success of the project. The project could be doing well and minting a lot more new tokens, but since there is more supply on the market now, the price of the token could be going down even though the project is actually doing very well. So what you want to understand here is that when you purchase a stock, you're purchasing basically a share of that company and the share of the company's future profit or loss. And when you're investing into a cryptocurrency token, you are investing into a utility of that blockchain, and you have to understand what that token's utility is in order to make a good decision on the investment. Because the token might be used for something else, and that could affect the price, even if the actual project is doing well. The token price could go down because it's being used in some other fashion in order to help that project. Now, depending on the blockchain, its token value may even be inversely tied to the project's success. Like we just mentioned, you have to do your research and look at the token minting structure and schedule. Again, more tokens could be minted as a certain amount of transactions come onto the network. Tokens could be burned as a certain amount of transactions come onto the network. You have to look into the project and the blockchain and see what actually is happening to that token as transactions are created on that specific network. Just as all companies listed on the stock market are different, not all blockchains are the same. So a lot of research is necessary to be able to make the right decision in order to see if your token that you're investing in is going to be something worthwhile. Now, in this next lesson, we're going to talk about actually why Bitcoin and other value exchange chains are actually going to be a little bit different than the concepts that we talked about here.